Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, June 24th, 2013. Well, a continuation of the trend to the downside today. The candle we're analysing is the second last candle here on the chart. That final candle hasn't finished developing, but with this second last candle in bar chart terms, we have an inside day. It's a bar where we have a lower high but a higher low. And inside days tend to be days of indecision. It means that in a downtrend such as we're in at the present moment, it doesn't change the trend. It continues the previous trend, so the previous trend is in force, which was to the downside. But it raises some doubt about continuation of that trend because the sellers weren't strong enough to take out the previous low, and that does raise some serious doubt about this market continuing this trend to the downside. Now, this is also a potential Japanese candlestick reversal pattern. It's a harami pattern, and that's where we have the body of the current candle within the body of the previous candle, and immediately after a first time frame downtrend, as we have here. So a very strong downtrend, and then this candle with the body basically within the body of the previous body. It does set the market up for a potential change of trend to the upside, so we do need to be aware of that. And if we look at the size of the previous two bodies, today's body and the body prior to that, in context of the size of the body immediately before, a very large black body candle, it does suggest that all is not well with this current downtrend. Now, that doesn't mean that the trend will change. It suggests that the sellers aren't necessarily as strong as they previously were, and they haven't the same amount of momentum. Now, that's a little wonder, because if we look at the size of that body, it's certainly much larger than we've seen for quite some time, and it's certainly in line with the market taking a bit of a rest, which is usually what happens after we have these extreme type days. So and the important factor here is that we're not really seeing the buyers coming into this market strongly. For the previous day's trading, we had a white body candle. The buyers had control when the market closed, but they found resistance around the round number 1300. And for today's trading, even though we have a black body candle, the buyers once again found resistance around the 1300 round number, and that is very, very solid resistance to this market. We also have resistance extending up to 1309 and then up to the 1329 level, so a very strong barrier to this market trading higher. Now, with today's candle, we've seen the sellers take control of this market once again, with the market closing between the midpoint level and the low, and that suggests that there has been a change of control from the previous day's trading, and certainly suggests that there is a possibility of the downtrend remaining in force and the market trading to lower levels. Now, the market will need to trade through the solid support at 1266.5, and if the market does trade down through there are quite a few levels of strong support down at 1250 level, the 1237 level, the 1218 level, and then extending down to the round number 1200. So very, very solid support down below as well. So quite some doubt about the extent that this market could trade to the downside. But with this body of this current candle that has finished trading being black, it does suggest that the sellers are starting to find some downside momentum at the moment. They've made some net bearish progress on the day between the open and the close, and we really should be watching that 1266.5 level. If we see a solid bearish start to the day and some solid activity down below that 1266 level, we could see the market testing to at least the 1250 level and beyond. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and 3 trading days ago we saw the market trade in a very bearish manner down through the 161.8% level. There is a possibility of the market testing to the 261.8% level, which is at 1240, and that certainly is on the cards with the lack of strength that we're seeing from the buyers at the moment. So we should be looking for a potential continuation of the trend, and watch the market if it does trade down to that 1240 region. In terms of the Fibonacci extension, and here we're examining the relationship of the current first time frame downtrend to the immediate previous time that the market was trending up, and we are seeing a market that's very, very overextended. We traded in a bearish manner through the 423.6% to the 423.6% level, through the 261.8% level, and for yesterday's trading we saw the market trade exactly to the 423.6% level and be rejected from there. That did set the market up for a potential change of trend, but we haven't seen that happen today. The buyers weren't strong enough to take out the previous high to establish a higher high and a higher low, so it does raise some doubt about whether this trend will actually change. Considering that the market has been flirting with this 423.6% level now today as well for the second consecutive day, it does suggest that there is potential for a change of trend again. So we do need to be on the lookout for a higher high and a higher low, and let's watch that high of the current candle, which is around the 1300 level. So very, very important trading with regard to these levels. If the market does trade in a bearish manner through the 423.6% level, we could see the market trading down to the 685.4% level at 1189. Now, it's very rare for markets to trade down to those levels, and if we do attempt to trade down through this 423.6% level, it really will say something about the strength of the sellers in this market. They would have total control of this market if we do see bearish activity down through that 423.6% level, and really would say something also about the lack of buyers and the weakness of the buyers at the moment. Now, just looking at a previous pattern that we had completed here, it was a wedge type pattern. Here you had the prior downtrend leading into the pattern, the large wedge moving against the trend, the bearish close down below the bottom barrier, giving us a target down around the 1300 level, and we saw that achieved. So that was a very good sell signal here. It occurred down below the cloud, so we had quite a bit of confidence in that happening, and the target has been achieved. There is a possibility of the market at the moment forming another pattern. We are seeing some sort of congestion at the moment, and we do need to be on the lookout for that, so let's watch for that if it does develop. Nothing happening at the moment, but if we do see this market trade sideways for a couple of more trading days, we could see a pattern develop, so be aware of that, especially with the solid resistance overhead and the strong support down below. That is an event that could occur quite readily. Now, in terms of Ichimoku, obviously a bearish market in all three timeframes. We have the market trading down below the cloud, so a bearish market in the long-term timeframe. We're trading below the Kijun-sen and the Tenkan-sen, so the market's bearish in the medium and fast-term timeframes. And the Chikou span here is below the corresponding price action, so it's confirming the negativity that we're seeing in the market. So this is all suggesting that the next move that we're likely to see in this market is to the downside. It makes this 1266.5 level very, very important for this market. As I've mentioned, bearish activity could see the market testing lower. The 1300 round number level of resistance is very, very strong. The market has tested to there in the previous two trading days. The market at the moment doesn't look as though it is going to trade up through there, although we should never preempt the market, and we need to wait to react to this market with regard to these levels. So I'd suggest that at the moment, the way that this current candle is developing, it seems as though the market will be testing down to the 1266.5 level.